Hi guys, it's your FX mentor and coach, Bliss Billion Dollar. And I want us to go a step further and talk about another important factor in price action. We've initially talked about candlesticks. We know how they are formed, the parts, and the interpretation. I want us to move a step further and talk about candlesticks a little bit more in detail. And these are individual candlesticks. So without wasting much of the time, let's get started. So candlesticks may come in two forms. They can be candlesticks that may signify a reversal, whereby if they appear on certain levels, we can say a reversal is likely to occur. For instance, if price hits a resistance and a certain candle appears, we can know that price is likely to change direction. So to start with, I'll explain the reversal candlesticks. Now, they are called reversal candlesticks because, we can even tell from the name reversal. They signify a reversal, right? So let's get into them. So the first type of candlestick that stands as a reversal candlestick is actually the Doji candlesticks. So the Doji candlesticks is a name for a session in which the candlestick for an asset has an open and a close that are virtually equal and often components in patterns. There are four types of Doji candlesticks, namely the Doji cross, the Doji star, gravestone Doji, dragonfly Doji, long leg Doji, and here is a picture of them. So this is the Doji star, this is a long leg Doji, dragonfly, gravestone Doji. If you open your charts, you should be able to see a good number of candlesticks. They form differently. But the ones that we're going to talk about, the ones that we're talking about are the major ones. And so whenever you see this, you should be able to know this is a type of candlestick that signifies a reversal if you see any of these. But then we don't mean just because they are formed, then a reversal will occur. No. How we use candlesticks is that we don't just use candlesticks on their own. We use them after they form on certain levels because we understand on resistance and support levels, these are reversal points. And if we see such a candle on those points, then that stands as a strong confirmation of a reversal. So this is how we're going to be using the candlesticks. We're not just going to be picking anyhow just because we've seen this candlestick, then we go in just like that. No. We wait for them to form on certain levels. For now, we know about support and resistance, so we're going to say at support and resistance. Later on, when we start talking about other things, then we'll incorporate them there. So these are the Doji candlesticks. Of course, I don't even know the names and all that. I just know to say they look like this and they signify a reversal. If you want to flex around your friends, you can know the names and flex at least. Yeah. So the Doji cross or star, this can be considered as both a bearish or bullish signal depending on where it forms. So if it forms on a support, then it's a bullish signal. It forms on resistance, then it's a bearish signal. So it is actually a warning that the trend may be ending. So the star's small body, real body, represents a stalemate in the tug of war between the bulls and the buyers. So it's like a balance thing. Yeah. In a strong uptrend, the bulls are in charge. With the emergence of a Doji star after a long bullish candlestick in an uptrend, it is a signal of a shift from the buyers being in control of a deadlock between the buying and the selling forces. So this is something that you can read at your own time. This is something that you can read at your own time. This is something that you can read at your own time. It's basically explaining those candlesticks. So let's talk about the shooting star. The shooting star is also another reversal candlestick. And let's look at what it looks like. So here is the shooting star. it will have, remember when we are learning about selling and buying pressure, what can we say about this candlestick? There is high selling pressure. So if we see such a candlestick form at a resistance, it signifies high selling pressure, and we know at a resistance that's a reversal point, right? Yeah, so that is even a double confirmation. So we'll only be taking trades if we see such candlesticks on the levels of interest, and those levels are support and resistance. The hammer. So let's talk about the hammer. This is how you recognize the hammer. Of course, it's something you can read. Yeah, the hammer looks like this. And if we can remember on the selling and buying pressure on candlesticks, you see, what does it signify? It signifies strong buying pressure. So if such a candle occurs at a support level, then we should be anticipating a buy. The hanging man. So the hanging man kind of looks like a hammer. You see? The only difference is that it's the color. Now, the other difference is that where this candlestick forms. If this candlestick forms at a resistance, then it's a hanging man. If it forms at support, then it's a hammer, right? That's the, yeah. So if it forms at a resistance, it should signify a sell. If it forms at a support, it should signify a buy. That's the difference. The spinning top. These can be continuation candlestick patterns or reversals. So these, depending on the kind of trend, you can either say it's going to continue or it's going to reverse, right? So it just depends on where they are formed. Sorry about that. Yeah, I'm actually recording the videos at night. And this is what the spinning tops look like. The body is like that, and we have these wicks like that. You know, this is something you should get used to, and you should be able to spot them out in the market. So this is what they would look like. You know, you see that, and there's a change in direction. You see that there's a change in direction. So the railway track candlestick patterns, and these are all reversal patterns. You see these, so they actually like come in this format. If they form at resistance, it's a reversal. If they form at support, it's a reversal to upwards. It's very easy, guys. The engulfing candlestick pattern. So what it really means is that, you know, there's one candle that is small, and there's a bigger candle that completely eats. To engulf is to somehow eat. So it completely swallows the other candlestick. Here is the meaning. You see how this one is small, and this one completely, you know, engulfs. So this candle is inside this candle. So this now is a bullish engulfing candlestick. So if it forms at a support, it's a bullish engulfing candlestick. If it forms as a resistance, it's a bearish engulfing candlestick. So here is a bearish engulfing candlestick, here's a resistance, and we have this candle being engulfed, and here, boom, the market fell down. The harami is actually a two-type kind of candlestick, and we see like this. So the difference is that, you know, with the engulfing candlestick, the bigger one is on the right. Then when it comes to the harami, the bigger one is on the left, right? So it's actually the opposite of the bullish engulfing. And of course, they signify a reversal. So you should know these candlesticks. That is why I'm not spending much of the time. It's the bearish harami. Yeah, dark cloud cover. This is what they look like. Of course, they are all, you know, reversal candlestick. Piercing line, it looks like that, and of course there are reversal candlesticks. Morning star, here is the thing. So morning star, we have a candle here, a bigger one, a candle here, a bigger one, then a smaller one here in between. So this signifies a reversal to the upwards if it forms at a support level. If it forms on a resistance level, it should be an evening star, which looks like this. So an evening star is simply an opposite of the morning star, and this signifies a reversal to the downwards. So that was it about the candlesticks. I hope you really enjoyed the lesson. This is why I've provided you with the PDFs. You can always go through to check the candles and look at them properly. So I remain your best and favorite FX mentor, Bliss $1 billion.